on the sidelines of the CNBC TV 18 Global Natural Resources Conclave in Delhi, Anshu Sharma caught up with the CEO of Vedanta, Tom Albanese, and began by asking him about the minimum import price for aluminium and if it is stuck in the house or the government is planning to come out with some outcome. Let's listen in.
Minimum import price is to provide a level playing field between domestic, locally manufactured aluminum and imports, sometimes imports that have been subsidized. So it really levels that playing field. Right now the markets, the world markets are higher, but these are cycles. Sometimes they're up, sometimes they're down. What we'd like to see is some mechanism in place to keep that level playing field. We would like to see an MIP coming in. We continue to see imports increasing, so that as India's overall aluminium capacity or demand increases, we see more coming in from overseas. So what we'd like to do is just create more opportunities for homegrown aluminum to be sold into the domestic Indian market.
Will the companies in the aluminium sector also look at filing a case for anti-dumping duty like we have seen in the steel sector?
Well, I think, again, what we've been doing is we've been working together with the government and with the consuming industries. And what I'd like to do is find a solution that actually works for everyone. Because, again, I think it's in everyone's best interest for India to have its own domestic homegrown production.
So what will be the capex plan for across the minerals that Vedanta is working on in terms of business in India?
So I would say that we'll be probably spending a little bit more capital next year than we had the year before. So we have given guidance of probably $1 billion or more for the next upcoming year. That's been the guidance we've already provided, and that's based upon continuing the expansion of our underground zinc operations, continuing the oil production, and we hope to see approvals with hopeful PSC extension, our joint venture partner approving. We'd like to be doing some additional projects in the Balmer field and offshore so we can increase our overall oil production. We also are continuing to ramp up our aluminum production. There's some capital that's associated with that, and we'd like to see 2 projects get back running that were originally up and running between 2010 and 2012, and for a variety of reasons had been suspended at that point. One is our planned expansion of our Tuticorin copper smelter, and that is something that produces about 400,000 tons of cathode for the Indian market now. We'd like to double that in capacity, and that's just a matter of getting the requisite permits, going through the final points. I would hope to see in the coming quarters that we start going ahead with that. In addition, we would like to get a secure source of domestic bauxite, particularly from Odisha, and with our relationship with the Orissa Mining Company. And with that, we'd like to resume the construction of our project at Lanjika, which would increase our overall refining capacity, and that's for the purpose of increasing our self-sufficiency of our aluminium. So we're actually not buying bauxite from overseas, or we're not buying aluminum from overseas. We'd prefer to buy our bauxite internally in India and refine it internally within India.
Okay. You also mentioned about solar and wind. What are the plans for Vedanta? Will you be investing a lot in coming future?
So we've been starting some pilot programs in solar now, mainly in our Hindustan zinc business, where we have already set the stage for some projects. And as we see those getting off the ground, as we get comfortable with the technology, most of it's going to be for our own captive consumption of that power. As we see how that works, I'd hope to be investing even further in that in the future.
Okay, that is interesting conversation.